What's going on, everybody? It's your boy JT Knows Things, and we are back to the Crypto Den. And today, I want to talk about something very, very simple, but I feel like a lot of people just don't get it. For those who may not know, I am JT or Jake Tullis. I am a software development consultant. For the past 10 years, I've been in the software development space, and I also have a finance degree. Crypto is kind of the marriage of my two expertise. Additionally, I am the fund manager of a hedge fund here in Cincinnati called Bleeding Edge Capital, and we exclusively raise capital and deploy it into the cryptocurrency market or industry. So, that is why I think I'm smart enough to at least put videos out on the internet. Um, I thank you for tuning in and hopefully learning something valuable here. I only want to produce content that is beneficial to you. My goal is for you to leave here with a deeper understanding of something and you become a more sophisticated investor with realistic expectations and sound decision making abilities. So, with that, I'm going to get right into it. All right. How to not suck at trading. Well, first, you're not trading, you're investing. There is a difference. Trading is day to day activity um, with the hopes of creating supplemental income, or really, it could just be you having a lot of different transactions inside of a month or a quarter with the hope, to make quick money or to just make money off trades. The difference between someone who trades and an investor, which is where you want to exist, is an investor takes a more fundamental approach and has a more refined, sophisticated opinion. Most traders will look for technical analysis. They will make probabilistic decisions based off of historical performance of an asset. Now, I'm not saying like, charts are shit. I use charts, but um, you have to understand the difference between trading and investing. So, specifically, if you're on this channel and listening to guys like me, you're trying to become a better investor. If you're trying to become a better trader, I'm not your guy. Okay. If you want to become a better investor, here's a lot of stuff that you can do, should do, you know, as you navigate this industry and build out your portfolio. One, the number one rule of investing, not trading, investing, is to understand your investment. If you could not explain what a blockchain is to someone, or a token, or cryptography, you have a long way to go to understand this sector. Just so happens that I'm your guy. If you don't know what those are, that's what I do. I teach fundamentals. I'm glad you're here. Look at my channel, go through my videos. I put out valuable, robust information about the fundamentals of something. So, rule number one, if you listen to any rich dude across the past 400 or 500 years that has written a book, that they're value investors. The Intelligent Investor by Benjamin Graham, I think, is one of the best books to help you understand this. But understand your investment. You should not invest in anything that you do not fundamentally understand. Okay, number two, do not buy anything that you are not comfortable holding for at least 10 years. Okay? I know that seems like a long time, but markets on shorter time frames are far more cyclical. If you were to look at annual candles, monthly candles, daily candles of large indexes or anything, you're going to see a ebbs and throws, ups and downs, where if you were to zoom out far enough, you would get a far more predictable market. You could see in the S&P 500, for example, the 5-year cycles, 10-year candles, all of that stuff looks a lot different, a lot more predictable. It is red and green every decade, literally. There are positive returns, about 10 to 12% for 10 years on average, and then there are negative returns for 10 years. If you're investing in that red candle, but you're only looking at a day a month and you're not zoomed out and being aware of where we're at in the short term and long term debt cycles and everything else and the M2 money supply, there's all these things that affect longer time horizons that are really important. If you're not a macro person or don't understand the difference, like all of that is kind of really important to know. Again, this channel teaches you all this stuff, okay? But ultimately, zoom out and relax. Relax. If you understand the fundamentals and you trust a thesis you've come to, you just have to wait. That might be the hardest part. So, tip number 3, you're trading, you're not investing, or you're making too many transactions. If you bought Bitcoin at 10, sold at 1,000, thought you were a genius, you're probably still kicking yourself. The reason why you would have sold at 1,000 is because you didn't understand the investment. If you understood the investment, you would have bought more at 1,000, and more at 2,000, and more at 10,000, and more at 20,000, and more at 30,000, and more at 50,000, and more at 100,000. Because if you fully understood the asset, you would know that its potential market cap is easily 10 to 20 trillion. If you talk to any smart person that fundamentally understands that asset, they would tell you the same. That would put Bitcoin at $1 million to $2 million. Why would you sell at 1,000 if you understood the asset? There's, I've been asked to keep these brief. If you want long form content, you really want to understand this stuff, I make podcasts now. The Crypto Classroom with my partner Steve at the fund. Tune in, listen to what we have. There's a whole hour episode that just got released talking about what is a blockchain. At the end of that episode, after an hour of me breaking it down 4 or 5 different ways, you will understand what a blockchain is and why it's so impactful and profound, and why people like me are so excited about this space, and why I can't seem to stay away from it. So, in recap here, okay? Do not trade. You are an investor. Understand your investment. Understand what you are buying. That is very, very important. Okay? Number 2, don't buy anything, don't invest anything you wouldn't hold for 10 years. You can't comfortably do 2 without number 1. Okay? And 3, don't trade too often. Don't trade in general. Rule number, I guess, 0, back again. Okay? Invest and remain calm. Increase your time horizons, increase your perspective and your sophistication, and learn how to keep a steady hand through the ups and downs and understand market cycles, okay? Don't be too zoomed in and have a get-rich-quick mindset, because you'll get burnt. More often than not, you will get burnt. All right, that's it. I'm keeping them brief and short. That's how you can become a better investor in today's world. I love you all. Take care of one another. Until next time.